When your disbursals have gone up, where is the demand really? Which loans have seen maximum pickup at this point in time, and where do you see more strength to grow?
We have been, if you see our product portfolio, while we are largely on the vehicle finance focused, but the focus on vehicle finance is as a AUM is slightly reducing from almost 70% plus a few years back. Now we are at 63% of the AUM is vehicle finance. We are growing other products like loan against property, home loan, and then the three new products which we introduced last year. These are growing faster because one, they are of a lower base. The second thing is we are now expanding the geographies in which these products are being offered. So these two put together, the growth rates are faster, and so they will progressively take a slightly higher share in the AUM. During one of the calls, we have spoken that the vehicle finance over the next 2 years will become 50% of the overall AUM, while the LAP and HL will be around 30-35%, and the new products will be in the range of around 15%. So this is the way the mix will change. By changing this mix, we also are strategically looking at diversifying dependence on a single product. So that way we'll be able to ride different cycles, whether it is auto cycle or whether it is any other product that has going through a low cycle thing. So which we can address and establish or maintain a steady rate of growth. That's our strategy.
When you mentioned that the new business has picked up, and I see that reflecting in the numbers as well, can you highlight as to what kind of products are being offered here? Is the pickup primarily on the unsecured loan side?
No, if you look at it, totally we have, at the end of March, we have 9% of the AUM in the new business.
Okay.
Of the 9%, 50% of that is the unsecured part, which is the CSEL. So almost like 4% of the overall AUM is what is the unsecured part. Another 50% of it, or almost 40% of it, is what we lend to SME business. SME is a segment we have been experimenting over the last few years by offering credit to customers who are in the group ecosystem, and we have now fairly got a hang of what is to be done with this and how to manage these customers, how to evaluate the credit worthiness of these customers, and accordingly we are now wanting to scale up by going outside the group ecosystem and finding customers, and which we find that it's a very large market of the SME credit appetite. So we want to capitalize on that, and we are looking at scaling this portfolio. So that is the second largest portfolio in the new business. The third one is right now small, around 5% of the 9%, which is less than 0.5%. That would be the number which we are working on, a very highly profitable but very it's a little complicated product which we call as a secured business personal loan. That one we are progressively testing, and according to what we experience, we will scale this up.
Mr. Arul, I understand that this pickup has come because there is a strong demand, but of late the interest rates have also gone up. So what kind of impact has it had on your credit cost? And do you see the demand sustaining across products with rising interest rates?
Yeah, see, the credit has not suffered because of the increasing interest rate, because people see the potential to grow their business. If you look at all our portfolio, whether it's vehicle finance or LAP or the new businesses, all of them are lent towards livelihood or business purposes. It is not lent for a discretionary spend like a consumer durable. Our focus is to lend to a customer who could make money out of borrowing from us and investing it into either a vehicle or a mission or or working capital. Now this helps them to focus that this is why they will never have a credit issue unless there is a very large scale, something like COVID or something which is impacting them. Because they have a business which is running, they will try to maximize the yield out of that business. So the money which is lent to them is plowed into the business which they are engaged in. Now that makes their stickiness to the loan and servicing to the loan much more, definite, so that they do not want to fail in their business, which is their livelihood incidentally.
If you could give me a final outlook as to what you think FY24 will hold in terms of growth for you.
No, as I said, right, it is little too early because we are only in the Q1, and most of our businesses also depend on the rural segment, which is also dependent on monsoons. So right now the monsoon is expected to be good, so we also look at it favorably. The elections are coming around, so there will be a lot of spend in the rural towards infrastructure, and that would bring earning potential of the customers, to improve the earning potential of the customers. So that these things are positive, and we look forward to a reasonably good growth. As I said earlier, we are certainly looking at a 20% growth on the AUM. We will target that, but it will be a little bit more concrete as we move towards or to the end of Q2, because then we will have the feel what is happening in the year, and by then the monsoon results would also be little more fairly clear.
Thank you very much for taking